I was meeting with an AI founder last week to talk about pricing, and they brought up that they've been currently putting 100% markup on their AI token costs, and yet procurement teams have been like throwing up all over that, like saying that's an egregious markup. Like, can't believe you would charge 100% markup. But the wild part is 100% markup really just means a 50% gross margins on just the token costs, which is way less than SaaS. And it's not an all-in margin when you factor in like customer success and all the
Yeah.
other things that they have to provide. And so this got me thinking, like, what is the end state for AI gross margins?
I just want to make that more real for listeners. So they're valuing their product at the same cost than it costs them to even make this thing run just based on inference and compute.
Well, that's what they've been testing, and customers are having a hard time being willing to pay that much of a markup or premium on the underlying AI.
I'm excited for this one because I've had some thoughts too on if we actually care for some of these companies, because a lot of podcasts and newsletters that I read, they've been talking about gross margin in isolation, but it's like, how do you know what's going on underneath within the OpEx and then the ending free cash flow profile? So I want to dig in.
Well, so I have a lot of data on what's happening with AI margins, and I want to talk about that. But maybe before we get into AI, like I was just curious, like what's the lowest margin business you can think of? It can be tech or outside of tech.
It's got to be the same business Spirit Airlines is in, right?
Yeah, airlines, I was going to say.
So airlines, I think, so I asked ChatGPT, I think that's about a 5 to 20, max 20% margin business, but probably a lot in the 5 to 10%.
Gross margin or profit margin?
That is gross margin. So 5 to 20% gross margin. So it doesn't provide a whole lot of wiggle room if your underlying costs increase by like 20%. You're kind of screwed. And so that's pretty low. But Costco is reportedly 11% gross margin via ChatGPT. I didn't check their S1 or 10Ks or any of that, but I'm hoping that's roughly correct. It's like 11% margin from Costco is a pretty low margin.
And what's their profit margin? I still think it's massive. So I don't know what voodoo magic they're doing.
Well, I think their profit comes from that executive club membership.
Oh, yeah, I forgot. Okay, well, that's a little bit misleading. Yeah.
That's like 100% margin.
That's 100%
I'm talking
gross
about
margin.
on for the products. It's they have this model of, we're going to charge basically at cost for the products, but then we're going to make it up on the membership fees.
So it's low gross margin very much by design.
Exactly. But the membership is your ticket to entry. I saw Walmart was more in the 20 to 30% range. So Costco is like undercutting them. But yeah, so you were mentioning restaurants, CJ. I think restaurants are really tough to give an apples to apples to because the margins are actually decently high on the food costs. So if you're just factoring the cost of food, like that's reasonable. But when you add in all of the experience around restaurants and like the fixed costs associated with running a restaurant, margins aren't actually high. But like on a food basis, there's probably 60, 70, 80%.
Yeah, I've talked to a couple of friends whose families are in the restaurant business. And whenever they start to talk about it, they talk about the rent cost first.
Yeah. So it's, their problem is like the incremental margin is not too bad, but you got to sell enough to even be in the black in the first place.
What about like I don't know, like a Zappos or something where you can buy shoes online?
So what I found is discount retailers tend to be in the 20 to 30% range, but then luxury retail is more in the 60 to even up to 90% range. So if you're like if you're an Amazon or a Zappos, you're probably at a relatively small margin. I don't know, maybe 20, 25%. But, if you're a luxury brand, you can capture a lot more.
And when you're in that type of situation, the death knell is returns. I remember when we were at Parts Tech, one of our propositions was, hey, if you order the right part, you don't have to return it. And it's the second highest industry for returns. It's 19% of all parts that are ordered get sent back. Think about it. Like someone has to take like a dripping, like a oil filter or something. I don't even know. Not that I knew much about car parts, obviously. Like Zappos is, I think it was 22% of shoes that are ordered get sent back. Like imagine factoring that into your P&L.
Oh yeah, I always send back shoes. That's a really tough thing to buy online. So I guess in auto parts, what was the margin profile there?
On a good day, an auto parts supplier would make like 18%.
On a gross margin basis?
Yeah.
All right. So they're on the low. I mean, retail's tough from a margin perspective in general. Anything retail adjacent.
Luxury makes sense though. It's a higher price tag. I listened to the Acquired podcast on Ferrari, and they said that they have the highest gross margin out of any auto company out there.
I believe it. Yeah. I think luxury tends to be highest. Although what's interesting is like the Apples of the world have managed to be luxury from a margin perspective and mass market. And that's like the dream spot to be in, but very hard to end up in that type of quadrant. The Ferraris of the world, what's the highest margin businesses you can think of?
I'm thinking of like a Google AdWords maybe.
Yeah, ad platforms, I think tend to be 70, 90% plus margin. I mean, there's not a whole lot of underlying costs there. Pharma was the one that my head went to because they have such big development costs. But then, when they're manufacturing the drug, that shouldn't cost them much, right?
I mean, there are multiple, not no bueno, but in Asana, like a productivity management tool, let's assume there's no AI in it. I think it's like 92% gross margin.
Oh, is that the highest in SaaS?
That's the highest I can remember. Yeah. 92, 93% Asana.
Well, your margin is my opportunity, CJ.
Wait, why didn't we include this? The highest gross margin and profit margin business is a parking lot. Ben, you interacted with one last night.
No, you're 100% correct. And this wasn't even a parking lot. This was like in the street. Like they had the parking lot, and this is just, they shut down the street. So
it was the first 105% gross margin business.
Hey, the person waving their baton, it costs something, but that's
true. Ali and the team at Tabs are building something that directly addresses one of the biggest headaches I see finance teams deal with today. Pulling data from your ERP, your CRM, your FP&A tools, and your usage systems and actually making it all work together. If you're running usage-based pricing or complex contracts, you already know how this usually plays out. Contracts live in one system, usage data lives somewhere else, billing happens in another tool. RevRec gets layered on top at month end, and finance ends up just reconciling everything by hand to close the books. This is exactly the problem Tabs was built to solve. Tabs is an AI-native revenue platform built for controllers and CFOs. It brings together data from your ERP, CRM, and real product usage into a single system of record. From there, it automates billing, collections, and revenue recognition without finance having to duct tape workflows together every month. If usage-based revenue is core to your business, this is the future of how billing and RevRec get done. Go check them out at tabs.com/run. That's tabs.com/run.